Welcome back to the best pro for you trading floor. Today we are breaking down the Euro USD and we have a perfect storm of macroeconomic data pushing this pair higher. First, Eurozone inflation numbers just came in hot. Month-on-month inflation actually doubled. And while core inflation dipped slightly by 10 basis points, the headline year-on-year inflation rose to 2.5 from 1.9, barely missing the consensus of 2.6. Now, on top of this, the US has explicitly warned member states to prepare for long-term energy disruptions due to the Middle East war, which is a massive deal since Europe imports around 60% of its energy. Meanwhile, the US dollar is also under pressure. Otherwise, we wouldn't probably see this momentum coming into the markets today. President Trump just announced also that the US is very close to striking a deal with Iran, which has eased fears, of course, of an all-out supply shock. Add to that Fed Chair noted that long-term inflation expectations remain grounded despite the recent surge in energy prices, and you have a recipe for dollar weakness and euro strength, at least in the short term. So let's see how this is playing out on the charts. Looking at the daily chart, the macro shift has the euro, providing the euro exactly what's needed, because we came and retested the previous high momentum candle open at 114.50. Importantly, we have left behind without retesting, of course, the previous lower band, which suggests now the next target to the upside is 115.90, which is the middle Bollinger Band. Potentially, we can go up to 116 or plus. Now, if bulls can clear that level, it would suggest a potential full-blown reversion of the recent lows and open the door to much higher levels, which, given the current volatility, get us up close to around 118. Let's not also forget that we have had an RSI over sold territory and bounce and reset to the 50 line. So if we do come back to the 50, it could essentially mean that we are heading onto a potential multi-week upside trend. However, we must respect the broader trend as well. The middle and upper Bollinger Bands are very easily understood that they are still pointing to the downside. However, and as I said before, we have a flattening of the Bollinger of the bottom Bollinger Band, which of course with the macro structure that we have, at least in the short term, could be what is pushing prices higher. But to find out the exact entries, we really need to drop down to the 4-hour chart. Before we do so, I just want to pull out that resistance level to ensure that we don't lose it, and to see if there is any clustering taking place. So on the 4-hour chart, you can see the immediate hurdle, right? Prices are currently facing direct resistance right at the middle Bollinger Band, which is around 115.15, I would say. So this is the current level that we are facing resistance. This current push higher started perfectly after the bottom band turned up. You see that? Following a novel sold RSI reading also on the 4-hour. So we have had an RSI oversold, and we're seeing the Bollinger Band squeezing in, and also the top band squeezing in, which of course suggests that volatility is contracting and a breakout is imminent, given that we don't expect the breakout to take place from here, because the squeeze at the top is at 115.70 and at the bottom at 114.50. Then obviously what we need to do again, multi-time frame analysis, go lower down and go on the 1 hour and see what does the 1 hour tell us. Okay, well, look at this. Interestingly, you know, the 1 hour Bollinger Band has already squeezed, okay, has already taunted and has broken to the upside Okay, for the best pro for you intraday traders, the 1 hour chart is where the action is, guys. So the bands here are now expanding after the previous squeeze, and we're looking at the third consecutive hour candle closing in the green. The momentum is strong, don't get me wrong, because we have 3 hours, okay, of bullish bias, bullish price action, but the 1 hour RSI is creeping. Danger is close to the 70 overbought territory, which can be considered as resistance as well at around 115.20 or so. So if we pull out our Fibonacci tool, okay, from the top, let's see, that's here to the bottom. What do we see? We see a cluster at 115.20, the 38.2 Fibonacci. You might say, what sort of cluster is this? Well, it's the RSI with the 38.2. That's the cluster here. Okay, and this is currently acting as a ceiling. If we break that, what is next? 115.42, the 50 Fibonacci retracement. But what do we typically do? And you must have learned it so far watching my videos. We typically, because we love the Bollinger Bands and they work, we typically measure the range of the breakout candle ahead of the break, and then we put that exactly at the breakout level. And what we actually do is we use the volatility and the measured move to project a potential level of resistance. So if we use this, we are looking at 115.25, which seems to be between 115.18 and 115.42. Some sort of like price action. But importantly, we are also looking at this specific intra-hourly reversion candle, a shooting star, that it was a liquidity sweep. Okay, so I think we are heading to 115.28 today. So here's the play. Watch how price reacts over the next few hours. You either look for end of day short position at 115.28 or a technical pullback alone. And then, of course, when the pullback comes, we reevaluate, we reassess. Or if you are patient, you wait for the pullback. Yeah. And then buy the dip for a long continuation towards 115.41, 115.65. Perhaps even 115.90 and higher. So these are the two opportunities I currently see. The short and at 115.30 is also a good opportunity. Okay, but let's not forget, typically close to the end of the session as well, it will be purely done on profit taken rather than on bearish momentum. So trade smart, manage your risk, and I will see you in the next breakdown.